Well, it's Ben Wakely here. Hope everyone's having a great Tuesday night. Look, I decided to have a weekend off on Sunday, being Easter Sunday. Spent a bit of time at Noosa. So, yeah, it was a little bit of a break from the property market over the weekend and also a break in general. So, thanks very much for tuning in on Tuesday evening instead of the usual Sunday evening. I definitely will go back to doing Sundays from this week on. Even though we have a few long weekends coming up or a few public holidays, we'll stick to that. A topic I'm wanting to raise tonight is one that's been in the news every time you turn the TV on lately. It's coming on is housing affordability. Now, I think we're basically grouping Australia together, and a lot of economists and a lot of real estate commentators talk about housing affordability. Now, they're realistically talking about Sydney and Melbourne when they're doing this. We're finding that in Queensland at the moment, I'm selling a lot of properties to people coming up from actually Sydney and Melbourne. I talked to someone today. 5 out of my last 6 properties sold have been from people moving from Sydney or Melbourne. Now, I think that it goes to show that they're viewing Brisbane as a market with value. There have been investors as well. So a Melbourne investor bought one in Red Hill. So they're really showing that the yields in Brisbane, or the yields that we're achieving up here, are far greater than they're achieving down there, and they're getting their foot in the market close to the CBD. So when people go on about Queensland having a housing affordability problem, I'd tend to disagree. I think people's expectations are really what's out of kilter a little bit. I mean, in the area that I sell, which is in a city or the inner west, I'm finding people sometimes a little bit out of their depth with regards to the budget that they're looking to find. But like I met up with a young guy the other day. He was looking to spend around $500,000. This is the example I'm giving now. $500,000 budget. Wanted to buy closer into town. We simply sat down for half an hour, had a look around, had a look at a couple of suburbs out in the next ring out, and found a number of properties. So it's all within your budget and it's all there. It just depends on, your expectation. So I think managing your expectations is more of a thing in Queensland. I can't comment too much on Sydney and Melbourne, but all I do know is there are a lot of Sydney and Melbourne buyers coming up to buy Brisbane property at the moment because they're finding that it's not affordable for them down there. They're even uprooting their family, their children, putting them in new schools up here, getting new jobs, and all that, just because they view their market as too hot. So I don't think at the moment that the affordability is very much a problem. I still think you get a lot of house for your dollar in Brisbane, and it's obviously very good value, to show that so many people are moving up north from the southern suburbs or southern states, to invest in Brisbane property or Queensland property. So finding that affordability is something that you got to really watch for. I think that the more and more this happens, that will keep bumping prices up. Yes, investors are going to probably be competing with first home buyers or people trying to get into certain areas. But if you broaden your search, if you're willing to do a bit of work and don't expect a fully renovated property, in one of Brisbane's best suburbs on a large block of land with a city view, you can definitely find great properties within 5 to 7k radius. As I said, the exercise I did with this young gentleman was have a look to see what he could buy, and it really opened his eyes up when he could actually see what he could buy if he just moved out a kilometre or two. So I think that that's the best thing to look for as far as value goes, is your areas. So really try and make sure that your expectations are in line with the market that you're looking in. Because if you go to, as I said, like a Hamilton or a New Farm or Paddington, you're definitely going to find that you're not going to get too much for your $700,000 or $800,000. But if you move in the next ring out, like I'll use Paddington as an example, if you move out to the Gap, Ashgrove, certain parts of, Enoggera, you can, definitely find a lot of house that needs a lot of work, but you're still finding houses. So I think the affordability has to be mixed up with the expectation of what you're actually buying. I know I've told people that the units are very risky play at the moment, the lower price units, the 2 bed, 2 baths in the lower price range. And I saw an ad in the paper on the weekend with ones that they're selling like 30% below what they were, a while ago, or what they were sold off the plan for. So that's a pretty frightening thought if you do own one of those. And also, I'd be very wary of investing in those. So again, as I've told all the people that have asked me questions and private messaged me, I've met with a few people. I'm looking forward, Cara, if you're watching, to bidding for someone in May for them. All the questions that are coming in are great. So, I would be looking to buy those properties on the bigger blocks and that next ring out. And so if your budget's $500,000 or $600,000, stick to your budget. Make sure that you stick to that budget. Don't go out of it, because you don't want to get caught when interest rates go up. So that's when things will be, really testing. So at the moment they're low. As my advice has always been, I've always gone by buying property which is, basically based on paying an interest rate of 8%, just to keep that buffer. And at the moment, knock as much capital off your principal place or investments as you can. It's good to build a large portfolio, but if you're very highly leveraged, you can definitely, when the market slows down, I don't know, you might have time off work, you might lose your job. You got to make sure you can keep those repayments up. So make sure you have that buffer of at least 20% when you're going into the property. So I'm fielding a few questions now. There are a few questions that came through earlier. So Sam will just ask those questions.
Questions just come through from Lane.
Yes, Lane, how are you, mate?
It says, welcome back, Ben.
Yes, how are you, Lane?
With Sydney and Melbourne buyers looking to invest in Brisbane, should we be grateful for that, or is it possible for our market to rocket like Sydney and Melbourne has and become too hard for people to enter the market?
So Lane, that's a great question. Look, I think you should be, it depends whether you own or not. I'd be looking to buy something now. I think Brisbane's had good steady growth compared to Sydney and Melbourne, where they've been up around 20%. So look, I think it should be an exciting time if you do own property at the moment to, cash in on that capital growth and that steady growth that we're seeing move up from the southern states at the moment. So Lane, I think it's exciting times. I think it will edge the market up. I think people will look for value because they see the Sydney market and the Melbourne market has topped out. So I would be suggesting that it's a good thing. So just be wary of where you buy and how much you spend. But as I said, the last few properties I've sold have been to people from Sydney and Melbourne, and we're about to sell another one to people that are coming out that have viewed the Sydney market that's reached its high, and they're pulling their kids out of school basically and starting a new life because they see so much value for money and they believe that this is where the value is. So so they're seeing it as affordable. So that's a really good question, and thanks very much for tuning in again, Lane. And yeah, definitely I think it is a positive, for property owners. But I guess what I'm trying to get across is I'm seeing this over the last 5 years, but probably this year more than any, people are actually making that big move. So it's probably on the back of those Sydney and Melbourne markets. So I don't think we'll get, I think it's pretty optimistic to say that we'll get, the growth that they've had, but I do think we'll get some growth on the back of it. But good steady growth is always healthy, because if it goes too hard, it can fall pretty hard. So I think just some good steady growth would be good.
Next question is from Mitch Hills.
Yes, Mitch. How are you?
People often say there's no bad time to get into the market. Is this true? Should you get into the market instead of dragging your feet, or wait to save a bigger deposit and buy a better property? Basically, where is the line between a cheap property that's not a great investment and getting into the market?
Yes, Mitch. Look, I think your question there is, should you basically get in the market at any stage? Look, I think you've got to be comfortable with what you spend. I think you can drag your feet around for a long time and never get in the market and be a doomsdayer. Everybody knows one. Everyone's got a friend that's always saying that the world's going to end tomorrow, or the bad times are coming. You're never going to pick the bottom or the top. I think my old saying is, if you're not in the market, well, you're not going to be able to actively do anything. I've bought some of my properties on the back of selling properties for a profit. I wouldn't have been able to buy some of those properties if I hadn't got in the market and been uncomfortable for a while. I think it's healthy for someone to go without things for a while in lieu of forced saving, which is buying a property. With the amount of rent that some people are paying, they could, have basically saved a deposit and paid half a house off. Get inventive as well, guys. I think, go and, buy a house and maybe rent, 2 rooms out to your mates that don't want to buy a house. They may not be in a position, but they want to move out of home, or they may have another investment, mechanism, or they might be into the share market and they might not want to buy property, so they still need somewhere to live. So, get them to pay some rent. So I think about, dragging your feet and waiting for the property market to come back and saving a bigger deposit, you might end up in a worse spot. So, no, I'd suggest, look, jumping in, being comfortable, again, having your 20% deposit, being able to pay the bank back at a much higher rate than the interest rates are now. And I think you'll go well. And as I said, real estate's a long-term investment. So by getting into the market, have that 10 to 15, 20-year outlook at least, because unless you're a builder like, the Gray brothers, who I do a fair bit of work with, that can flip them, and obviously they're builders, so they can do it at a much less margin. I'd definitely look at getting into the market now and looking to buy and getting into this run that I believe is going to happen over the next few years in houses anyway.
Next question is from Kaz. She's simply wondering, is Queensland in a bubble?
Thanks, Kaz. Is Queensland in a bubble? I don't believe so. Many people out there might think we're in a housing bubble. But again, I think they're talking about Sydney and Melbourne. So really, I don't think we're in a bubble at the moment. We haven't had enough growth. We're still seeing a lack of stock on the market. We're probably down about 30 or 40% from last year with houses on market. And groups through open houses are basically through the roof at the moment. So getting number of inquiries, average number of groups is 20 groups per house in this area that I work in. And I know much of the inner city fringe, and I've got friends that work in outer areas, and they said that, again, the supply and demand. So there's a lack of supply and high demand. So yeah, there's definitely that is happening at the moment. I don't believe that we're in a bubble. That's my interpretation. Anyone can, have their own point of view, but I don't believe we're in a bubble at the moment. We haven't had that growth, as I've just mentioned before, with Sydney and Melbourne. It's just been good, steady growth, and I think that's a good way to be nice and healthy without going, silly and being 20%. That's great, and but Sydney house prices have gone up basically 100% over the last 5 years. So that's definitely probably topped out, and you'd be risky buying in that sort of market. But I think Brisbane, safe haven, lots of southerners coming up and buying. So I think it's a good place to be. Thanks very much for your question, Kaz.
Next question is from Lachlan Grant.
Lockie, how are you?
What's the best way to find a development project?
A development project, Lockie. Mate, it depends what development you're into. I know you've got some houses, I think at Banyo, from memory, you've told me about. Look, I think the best way to get into development is obviously do your DD and research into your costs, your ingoings, your outgoings, because there's nothing worse than getting into a project and realising that you're making no money out of it, or you're losing money. So make sure you do your due diligence into buying all your costs, or your council costs, whether you can build units. So if you want to do a unit development, whether you can build units or townhouses in that spot, and what the end product's going to be. So it's a pretty simple game. I know we went to school together, Lockie. I'm no rocket scientist, mate, but at the end of the day, it's pretty much maths. So it's not rocket science. So as long as all the numbers add up, and the ins and outs are, you've catered for all the ins and outs, you should go well. So when looking for a development site, just make sure the numbers stack up. As long as the numbers stack up, whether it's units, houses, townhouses, it's fine. So that's what I'll be looking for, just the numbers.
A question's just come through in your inbox, so I hope they don't mind me asking.
Okay.
I'm looking to buy my first property. What do I look for, and what advice would you give me when I'm on one income? The person's name is Stephen.
Okay, Stephen has just inquired about he's looking to buy a house and he's on one income, so that's his... I'd probably go back to what I mentioned before, Stephen. I'd look at buying a house and renting it out to the other rooms, out to friends. That would supplement the income that, obviously your income on top of their income that they're going to be giving you as far as rent goes. That can help cover the mortgage, help cover maybe the interest, the rates, or the, whatever, water, whatever the costs are. So if I was looking to buy a house and I was looking to buy it by myself, I'd be looking for friends to move in with me, maybe renting out a room or something like that being your first property. So, or even, I know guys that did it last year. There was 3 guys that bought a house together, so they went thirds. Obviously it becomes difficult when you want to buy a second and third property. So realistically, I'd look to, buy the property, see how much you can rent the rooms out, and that can supplement an income as well. So if you only got one income, look at the rent as your second income.
Next question is from Matt King. What is your opinion on buying/building a brand new house and taking advantage of the first homeowners grant? Or would you recommend foregoing the grant to buy closer to the CBD?
Yeah, that's a good one, Matt, because obviously with the home buyers grant buying that new house, I personally, mate, I'd forgo the first home buyers grant, because realistically, say if you're buying a new house in a larger state, that $20,000 grant, I believe, if you're buying in a larger state and all the houses are the same and you're really relying on capital growth, I'd forgo that and I'd actually look at buying something further in and closer into town. So yeah, good question. I wouldn't just be buying something based on getting a grant, because some people might have bought a unit a few years ago based on getting a first home buyers grant. Now that first home buyers grant would be well and truly gobbled up in the loss. As I mentioned, some units that have been sold at least 30% below what they were selling a few years ago that were advertised on the weekend. Again, little smaller units too, but definitely forgo that and look to buy closer in. And don't worry about the 20,000 odd for the first home buyers grant.
Next question is from Rachel. Where do you think property prices are going in Queensland in the next year or so?
Okay, Rachel's asked where do I believe Queensland property prices. Depends where you buy, what suburb. It's hard to say. Not all suburbs are going to be the same. Some suburbs have had really good growth. I looked at one today that's Enoggera, and it said it's had 35% growth in the last 5 years, and that's a bit out of the area that I personally sell and buy my own properties in, which is, that's great growth. So, look, realistically, I think Queensland's going to have steady growth. Again, I think we're going to definitely have people moving up, from down south. I think we haven't had the growth that Sydney and Melbourne have had. So I think good steady growth is what I believe. It's going to be looked at as a bit of a safe haven as far as, your rental yields compared to what you're paying. So, look, I really do believe that Queensland's going to realistically have and look at what you're buying and make sure you can afford, and that's the biggest thing. Make sure you can afford what you can pay back to the bank plus the 8% interest rates. It's a big thing. Interest rates are creeping up. They're going to go back up. Don't base your repayments on today. Base it on 8% at least. And I think you'll be, you'll turn around in 10 or 15, 20 years time and be glad that you bought in today's market. So I hope everyone has got a lot out of this evening. Again, I do get a lot of private messages and I do get back to everyone. And I am, bidding on someone's behalf in a few weeks that's contacted me through Facebook. And again, I have met up with quite a fair few people that want some one-on-one mentoring or have got some questions that they might not feel comfortable asking. More than happy to answer all your questions. And as I said, there's been a fair few of them, and I will get back to all of you in good time. So thanks for joining me tonight, and I look forward to seeing you this Sunday. Thank you.